Hey guys, let me get this screen going here. I typically trade NQ. We can look at ES if you guys want. That's cool too. Let me take out some of these indicators so we can get a little clearer picture here of what's going on. Um, as always, feel free to utilize the chat, ask questions, give me comments, whatever. I know there's a lot of lines on my charts, but I'm a active trader, so while we don't, I've gotten pretty good at ignoring the ones that aren't getting any reactions currently. So what I'll do is I'll actually make all of them go away, like this. Hide all, whoops, and get a sense for the structure, right? And then and I watch the markets all the time, so I don't have to do that very often. But I might go from a larger time frame down to a smaller one and kind of identify, okay, this is sort of where I expect that like stops are sitting, and there was liquidity up here, right? Like that's my first step. And then what I typically do is I'll add the voodoo range for the week, and those levels, and just first of all primarily just see, can I tell what phase of the market we're trading? Um, Sorry about the bells. That's just the that is the algo telling me to take a look. And that's why I'm actually trading, because I was gonna go to bed, but heard it ringing, and I'm like, okay, I guess we're moving. When it's consistent, like ding ding ding, it's like, okay, I'm probably missing a trade. I should just wake up and just trade now. But yeah, what I'm looking at here, if you haven't seen my video about the voodoo range and how I use it, the two things I use it for primarily are to target like exits primarily, and then also to determine what phase we're in. So you can see we were in a momentum phase back here where we were dropping more than two voodoo range levels, and then the retraces were much smaller, right? And the retraces tend to interact rather exacting to the levels, right? And that's usually what happens. Or the midpoints, like this is a midpoint here, and this is a midpoint between the two. And when I say midpoint, I mean in between the two, right? So that it's exactly in between the two. And so when it does that, it's usually got a lot of momentum, and it's basically just going one direction. And I don't want to fight that. And then the other two possible phases is where they're stuck inside of one range, so between two levels. So this is a good example of this, where it comes down in here and it just kind of gets stuck, right? And that's like a consolidation balance period. And so there you can long underneath the voodoo range or at the voodoo range, and then target in through passes through the middle, right? And then you can short up here and target through the middle, and then eventually it continues, right? So now we've gone into what is typically the hardest phase to trade, and that's expanding negotiation. And what that basically means is that neither side has clear control, but the range of trading is expanding. And so both longs who got like long here or here are getting their stops taken, right? They're sweeping underneath these pivots before reversing. And then when they reverse, they take out pivots to the upside. So see that? So there was liquidity here. Well, actually, it started back here. So there was liquidity here. They hit it, right? And then there was liquidity down here. And there was then liquidity here. So and then they came up and they hit this one. And then they came down and eventually hit this one. Then they sucked up liquidity up here. Then they finally came back and cleared all this out, right? And so it goes back and forth and back and forth. And so if you're a swing trader or like a longer, like you're looking for more than just like one rotation, you end up really getting hurt. Or if you trade breakouts, you just constantly get hurt. So like if you short here on this breakdown, you get annihilated, right? But then you're like, oh, okay, fine, I guess it's bullish, and you buy this, and then you get ripped up, right? So and the market does this a lot, and so I've explained in my video, and if you haven't seen that Voodoo Range video, check out my pinned tweet. There's a comment in there I put in there with a link right to it. And early in the video, I talk about the phases, and then later in the video, how to trade them. And when it comes to this expanding negotiation phase that it looks like we're in right now, the way you trade it is you target the edges, but you can't just get short because you crossed a high, or you can't just get long because you crossed a low. It's very different than trading consolidation, or you could often just like every time it comes in here, just keep adding to your long position until you get back to the middle, right? Like you can't do that here. You'll get absolutely crushed. You will blow up accounts doing that here. So like the I can't call it a recommendation because I'm not licensed as a financial like advisor or anything, but what I've found worked for what I can tell you, what I've found hasn't worked is trading momentum. So like blowing or Freudian slip, buying the breakouts does not work. And then, like I said, just adding to your position, just like martingaling basically, with a mean reversion strategy does not work either. So what does work then is if you're not an experienced trader, you should just sit out during these periods and wait until one side has some momentum. And like I said, in the video, you can I show you how to use the Voodoo Range to determine if there's momentum or not. And here the primary way is to get a impulse move that's followed by a retest of a Voodoo Range level that then extends again. So it's basically looking for that ABCD move, right, that you see so often. So for instance, I'm gonna have to unhide my everything. So all the rest of the lines here, just so you know, the red lines are volume points of control that are from this period here, the lows from the summer. I've highlighted two important levels that I expect most of the volume to trade inside of. And when we are between these two levels, so on NQ it's 11,472 or so, and 11. Actually, there's two down here, so that's why we had so much trouble down here. There's probably another one up here that I didn't mark, but let's just say the top one, right, 11,300. Moving through here, in between here, it should be relatively easy, right? So see how we sweep this area very easily. The reason is because it's going from one high volume node to the other, right? And it's filling in this area in between them until we determine who is in charge of the market. So one way to trade this, once you've identified the where the volume is, right? And like I said, if you're in the trade and perform room, you already know how to do this. You just have to apply it to candlesticks. But you basically find wave to lows, wave off of lows, and then just the same techniques we use on the Renko charts. I use on candlestick charts as well, and then I extend them to the right. And what you'll find is, like I said, you'll basically have fair pricing in the middle and unfair pricing outside of them. Now, the little dashed lines are actually fib extensions. You really don't need all of these. I just have it set like this because you don't always know which ones are going to be active and reactive. Oh, look at this reaction off the Voodoo Range level. I don't trust it though, because this is getting negotiated. See how there's nobody like claiming one side or the other. This is actually the point where we're seeing the orbiting. And again, if you don't know what I'm talking about, you gotta go watch that video. But when you orbit over around a Voodoo Range level like this, you don't use it for support and resistance. It's just your midpoint. It's actually your target. So if I was short from up here, I'd be getting out of my short here, and then I'd maybe hold a runner or two in case it extends to take liquidity right away. Because sometimes, as you can see, it does, right? So, I was talking about the fibs. So the fibs I draw very differently, which again, you can see in the video. But what you'll find is that your like classic the big fibs, right? The 61.8, uh, like the 50 retraces, the 100 extensions, and like the 1618 extensions, right? Like those are the ones that you really like want to watch carefully. But I've just got a preset here that has them all. So like I start there, but like you can do this however you want. Like I have one that highlights the ones I look at the most, for instance, and then makes the rest of them very light. But what matters more than the fib and what level it is or whatever, I'm not a huge believer in like, you should take the 61.8 retrace every time or something. There's a time when fibs do work like that, but this isn't it. It's not this phase. But what you can do is, like I said, what I do really trust is these, the using volume and the volume profile to determine where fair pricing is. So, like I said, this area in here is all fair pricing. So we're gonna call it this one. Like I said, this lower one, um, it can extend down to there, but it doesn't always, right? And if the longs have this, they will actually defend this. So I'm not going to mark it off yet. And then there's another one up here, and if the shorts are in charge, they will continue to defend this, um, like religiously. But what you can do is you can actually just ignore basically all of the levels inside of here and try to get, except for maybe the midpoint that it's orbiting, the voodoo range level, and just try to get sweeps through here, and you can trade really well that way as long as you size correctly, so that if you like get triggered here and get stopped out, you can get back in again when it triggers again, because that will happen. Like it's not easy. Right, but you know the direction that way because you know that you're just shorting this and you're buying this, but you obviously have to manage risk somehow, right? So I use the algo to do that, but like there are ways, especially with ES, there are definitely ways to do it without it. With NQ, things move so fast that like I would never trade it without the algo, but the opportunities are so much, like there's so many more opportunities to trade that I can literally open it pretty much any time and be expected to find like 3 trades in like an hour or two. No problem. So like I can do ES, but like there's a chance that we could just be sitting around waiting and watching the market move without us because it just might not set up with a high win rate. But and then when it does, it's going to give me like 5 to 10 points most of the time, and then sometimes it'll go like 20 plus on ES, but that might not even happen in the next couple hours. With NQ, there's a good chance that we'll get a couple, no matter when we look at it, we'll get a couple 15-point trades, or at least like 12 to 15 points, and then some of them could go 50 points plus, right? But the 15-point trades are a lot more. They show up way more often than the 5-point trades do on ES. So you just have more opportunities to actually get into positions, and yet the win rate's still really good. So the main idea with this expanding negotiation is once you've identified where the orbit point is, which, like I said, you can use the voodoo range for, and you've identified where the volume is, and that's usually to the left. These are really hard when so this very rarely occurs at spots where like everybody knows who's in charge, right? They occur here in exactly this kind of situation where like we're trying to determine whether or not this low is legitimate. That's when you see this, because it's like a big fight over this important area, and it develops because see how the volume point of control this entire area here, this whole here. So I drew, if you watch my video from yesterday or maybe the day before, I talked about this, that you can draw the volume profile of these consolidation periods that in the area that you're trading in from earlier, and you'll get the like if you just draw this, right, where is the draw volume profile drawn, if you just like take this lift off the very low of the year, right, all of the volume was down here, and then if you zoom into smaller time frames and look at this drop as well as this rise, what you'll see is that you had a volume build down here as well as a volume build here, right? And so because of that, this middle section where we did all this consolidation before they lifted off, they were never able to come back and test into it. See how they tried to get to this volume area high and it just lifted off, right, it like tried to take it back, but it got this high volume area here, which like I said, you can't see on the profile, but it's there from this drop. Once they got over this, it was just they just shorts just got squeezed to high heaven, right? Like they couldn't get back here. But what we don't know then is whether or not the market actually has legitimate buyers back here or if this was just a short squeeze, right? And so to determine that, what you need to do is you need to return to the area once you run out of sellers, which happened here. They ran out of sellers to squeeze, I mean, and buyers didn't follow through anymore. And so you get a retrace back to this level, and you can see that they tried to defend it again, but this is very rarely going to hold. And this time, what you saw was another squeeze, right? Because when something is rare occurs, like you tend to like see how many times they bounced off of this level, right? So you don't know which one it's going to be that's going to stay under here, but they're gonna. Even I say it's rare in that like when you get these bounces, usually what you have is a short term rip like this. What's rare is this, where you get a test of it and then an absolute squeeze, right? Usually you test it, you rip, and then you come back down. But this one made a higher low, right? Went even higher for like a week or two, or like a month. And then it eventually came back in here. And you can see this time it just fell right through it, right? Like you'd expect, right here. It fell right through this because it's already done so much work up here that there was just way too many buyers trapped there, right? From all that buying that they did over and over and over again. So once they came back to test them from below, they rejected over and over and over again. It's the exact opposite of what they did before, right? Because now sellers have momentum instead of buyers having momentum. It's just the same trade in the inverse. And so now what the interesting, but that would be very normal, right? And then usually what you'd see is a rejection and lower, right? Because buyers have or sellers have control and buyers have been trapped. That's what you'd think, right? That it's very simple, that it just like reverses. But the market is not like that usually. What the market usually does is it to be able to extend further, it needs to trap not only these longs from up here. That's not actually enough. It's very greedy. It needs to trap shorts too at the lows, as well as new buyers coming in until one of these gives up, right? And while the sellers have a big advantage because they've got all this pressure up here pressing down on them, the buyers have an advantage as well, and this is why this happens. They have the advantage because we are trading at a previous low, right? So there's these sellers that were trapped earlier underneath. See, this is this double red line, right? With the voodoo range in between 11 to 86.25. This is a super important level, not to hold on a test, right? It doesn't have to like, I'm not saying like if we trade 1 point below it that it's a problem. All I'm saying is that we have to find buyers anytime we trade under this because it had a lot of volume down here. And if you could get under this and then test it from below and roll over, it can go a lot lower, right? But since they bounced off of it, sellers are going to be generally like anxious about being aggressive because what ends up happening is as soon as you get to that high volume node, the buyers react, and then sellers quickly get out of their shorts. And then you can see we did get under it yesterday or today overnight, and then they immediately rejected when the Bank of England BOE intervened, right? We got this big squeeze up, but you can see that it took out the liquidity and then it rolled over back to this midpoint. So this is not bullish, but realize that like it's also not necessarily bearish. And that's what's tricky about it, is that the direction is relative to where you're trading. So when you're up here, you can short way better than you can long. But once we get down here, the longs will actually work, even below it, the longs will work better than the shorts, right? Until this phase ends. And like I said, the only way you know the phase ends is, for instance, when it gets underneath one of these and then tries to come back up through it. But instead of getting a squeeze, sellers re-engage and you go lower. And that's really the only way to be sure that this phase has ended. There are clues though, and one of them is volume. You can see here that the this was still part of the down move, right? And so they got some decreasing volume here, which started this whole. See how they had a little bit of consolidation, and then it started to expand, right? And so see how volume build, volume build, volume build, but then today volume was low, right? And so during these expanding range phases, these balance phases that are an expanding range, you should see expanding volume with the direction that you expect the market to go. So when it goes down, 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 and all of this volume is getting bigger and bigger and bigger, that makes sense that you'd think you're going to go lower, right? But then we went lower on really, really light volume, and so they rejected it, right? But when they rejected it, this volume on the upside actually it's bigger than this green volume, so it's not super weak, right? And we couldn't close these big candles over this high, so sellers aren't trapped. Other than that, they like whoever was trapped on Wednesday has the opportunity to exit their trade again without getting like totally annihilated. And so the really question is how many shorts were stuck down here, and how many of them exited? Because if we have enough fuel yet, we can bounce, right? So if they trapped enough shorts down here, they can actually add to the pressure, to the buy pressure when we return there, and we can take off on a higher low, which is, like I said, usually how this starts is you get this higher low and then a retest, or you get a lower high and then a retest on the lower high that breaks down. So one of those things will happen, and you just don't know which one it's going to be. But the nice thing is that once you know that that's occurred, you now know to switch or I know to switch my strategy to trend following strategies rather than these what I call second mouse strategies, where you steal someone's stop and then trail it the other, or take it the other way back near their entry. So if you think about it, the guy that bought today on the breakout, he probably or no, sorry, it's the seller. So the seller who sold yesterday, right, probably put their stop up here. And so once we traded over that, if we had a sign of aggression, which we did at the end of the day, you could have gotten short on any of these retraces, and you'd take it back into wherever they were getting short. And you can see that this is where most people got short. It's this big, heavy down move. And so there's some consolidation in here that's going to create some at least short-term resistance or support, I guess. And so this is a very good place to take profits, but it's not a very good place to buy, which is why I'm actually not looking at the algo right now, because if it sets up, I don't want to take it. Not because the algo won't work, but because my bounces are likely to get stuck inside of here, and then we can easily trade to the bottom of this. So what I would prefer is to get a lift that I can then short some more, right? That would be preferable, but really you want to get short from outside of this high volume box, and actually it's a low volume box, but that's sitting between these two distributions, or get long from below it, preferably below this volume build, and then just wait to make sure that they don't defend this, right? So you could see them bounce and then take that high volume node back and then get long here. That's not that bad, right? But I'm not going to long off of 11,364.75 no matter what, as long as this phase continues. So like I said, I know there's a lot of lines, and I know that the fibs might be confusing, but what I wanted to show you is that if you ignore all the fibs that happen in this orbit, right? As well as like I'm not gonna, like I said, I'm not gonna use this level, and so I'm not really gonna even think about these fibs. We could just turn them off, like one by one if we wanted. But if we then go beyond this and we're like, okay, where should we expect a trade? It's going to be on one of these levels most of the time. You just don't know which one it is, so you have to wait to see the reaction, right? I'm not sitting with buy orders on all of these lines and like getting destroyed. I'm waiting for this, right? That's what I want to see is that reaction. See how that like this one is pretty good too. Um, and I might have gotten faked out here, but it already made this move back up to the orbit level and then rejected. So this started to look like momentum. And that was the Apple news. So I wasn't trading there anyway. But you can see it on the let's see, are there any? I don't have the fibs lined up to give me the shorts, but they would line up here too. This is just the close from yesterday. That's interesting. But so in other words, I don't want to be getting long here, but I would be willing if it bounces off of any of these lines, like with some conviction. I would be willing to give it a shot, but I prefer that this low got taken out first. It needs to take that liquidity because it's got so much momentum here that it's going to push until it takes some stops. We're going to see some volume come in before we get a real reversal, right? So now let's go to the algo, and what you will see is since the close, which RTH close. Now this is the 24 tick, which is the this one here is the 24 tick, which is the time frame that I actually trade. I have other time frames up that are higher, so I can get hints about what the higher time frame is doing. But this is the close of the day, and so we got this pink bar, orange bar, and I did another. I was doing a stream at the time, and I pointed out that if we can get under this high volume node here, that it's probably bearish, and that all you need is a retest, and then a trigger to get short. Now it didn't do it there, but what you can see is the wave off the low produced this high volume node. So if we mark that here, that's where most of that volume was, and we'll just erase the volume profile so it's not too much to look at. It turns like this ugly color because that's overnight trading, and it's ugly trading overnight usually. So this is your short when you get that same orange bar that interacts with that high volume node. And again, that only works because we established volume below it first and then came back. It's the exact same thing as I was just talking about, where we reject a level and we come back. It's just this, right? The only difference is that I'm getting a precise level that says short right here, and you can put your stop, or I can put my stop right there, right? So I've got like a 17-point stop that produces like a monster trade, right? And that's just how it works. Now, if you miss this one, the good news is it's set up again over here. Where was it? I saw it. This was the main one. Thought there was a trap back in. I might be wrong. Oh, it didn't quite reach it. Okay, it didn't set up with a high odd setup. It just had a 3-bar combo. I thought I saw an, oh, I see. I saw this. And this was highlighted for a different reason. This is the same trade. Here. It's the same trade. So see how that's the high volume node of this peak? And so you had to get underneath that and then retest it and get an algo signal. So that's another short, just a little bit lower. And that gets a monster extension, right? Does it do it every time? No, like it stops sometimes, like any setup, anything is, there is no 100% win rate, but it just doesn't exist. But for a 15 to 16 or whatever that was, 17-point stop, that's a pretty wicked trade,
And it works on the long side too. You just have to it's just got to be bullish, and so you have to. Now I know there's a lot of lines here, and the good news is that you don't have to pay any attention to them. In fact, if you're in the room, you're used to seeing this, which doesn't have barely as many. And so what I did is I took this algo, which is Simon's algo that everyone sees in the room, and it's got the same signals. It's got the orange, all the important ones, right? The orange and the stars and the triangles, and then these. What I've done is added things so that I don't have to think, and I can just look at it and respond. Because sometimes NQ moves really fast. For instance, see these little triangles going up here that are blue, baby blue, and then the triangles going down. My algo draws lines across that are green and red like this, and it lets me know where that there's probably liquidity behind all of these, right? So that's what mine looks like. And if you look at it like this, it looks kind of confusing, but keep in mind, when I'm trading, all I care about is this bar. And is it signaling or is it not? And so I don't want to have to visualize, because I have lots of trades that, for instance, need to get, like I have a trade that we need to trade under this line and then come back up over it right away, and I can get long. Or I can get above one of these lines and then come back down through it right away, and I can get short. You can still see that on Simon's. You just have to like visually picture where it is, or one at a time draw the lines and just like erase them as you go if you're overwhelmed by so many lines. I do that, or I did it for a long time, and then I'm just like, well, look, why don't I just tell the algo to draw the lines for me? And then even if they happened a long time ago, I'll know, for instance, that we have a ton of liquidity down here. So let's say I want to get long, right? Well, this one is probably an okay place to get long because I've got a lot of space before all this liquidity down here, right? But once I break this one, once I break this line, what you're going to see is they get momentum right there. They start to get momentum, and then I can visually see all of these lines all line up in a cluster. They're going to all get taken out, right? So I can avoid this. There's no algo on it anyway. But if like this was a green bar or a star, I just skip it because I'm looking at all this huge cluster of stops basically just waiting to be hit. I can skip that one, right? And then look what happens. There's no more green lines down here, right? Until way down here. So now I can start looking for longs for a scalp if I want to. Is it the best place to trade on the chart? No, but if I wasn't looking at the chart, I'd say, okay, now I can probably start taking longs. So like this one's probably okay, and this one's probably okay. You know, maybe this one might be okay, but it's a higher low, so it's not preferable. But it's yeah, if I wanted to scalp out of here, that's how I would think about it. Whereas on Simon's, you don't really know when you're trading down here. You don't see that there's actually liquidity down there from way before. But the market remembers. Like you'd have to go so far back before I don't even know where it is, right? It's like from the beginning or the middle of the day. Eventually it's back here somewhere in the same exact area. God, I don't even know where it is. But one or another, somewhere in there, I must have moved the market. Oh, I did. So somewhere back here, there are some pivots. Oh my goodness. There. Right? From the open, it looks like. No, pre-market. Pre-market? Oh my god, I don't know. I must have moved it again. One way or another, they're there. It might be those. I should have drawn fucking lines. But you see them on mine, and so I can just see this cluster, and I know I don't want to get long without even having to look at the chart and be like, oh, that makes sense. We're right in the middle of this like fair pricing where I don't expect anybody to defend either side. Well, I don't want to trade there, right? Like I can just do that. I can just look at the chart. But there are times where I get like in flow where like I just scalp like back and forth, right? And just wait for the setup one bar at a time because it's going so fast. And I just, yeah, you can just rack up like a couple of quick trades and just be done, you know? So that, like a lot of times it doesn't even matter where you are on the chart. I can see it on the algo. I know if I can trade it or not. I do have some extra indicators on the bottom as well. These we don't need. I'm actually going to move them out of the way because they're a little bit distracting for a lot of people that don't know what they mean. All they are is that they're looking at rotations on different time frames, and they're showing me where we are in the rotation on different time frames. So the long and short of it is I want to be trading with these lines, like in the direction of them, and I prefer that the rotations are wide. So see how these rotations are very short, right? That tells me that my counter trend mean reversion strategy is not going to work very well. When it does work, I don't even have to look at the chart. Here, watch this. I don't have to look at the chart. So, okay. So, oops, let me get away from price. Oh, I was just going to, okay, so see how wide this is? Nice and wide, right? This is a pullback in a trend, nice and wide. This is okay trading for me. And so here, I'll show you what that looks like right there. What we're gonna see is back and forth rotations. See that? Rotations that I can actually trade. So like, here's a short where that arrow is an entry, short. There's one. Oh, the blue, right? Oh, I missed this one. And the star is a trap back in. Oh, it missed it by 1 point. Like 1 point missed it. Right? So that's good trading. And then here's the pull. Oh, where's the pullback? Right here. So this move right here is this pullback. So you look at the higher time frame is bearish, right? And when these lines go up, but the green one doesn't, that is a short opportunity as long as it triggers, which is right here. So that's the pullback short. And then they rip it up, but it sets up, thankfully, with the algo signal. That one just doesn't quite trigger, right? And now look, it gets tight. This is not the place where you counter trend trade. You just trade the trend when it starts doing this, right? So this one was tradable. This is not tradable, right? Not tradable, not tradable. Starting to extend, but still pretty iffy, right? So I can use those, they're not here. They're not here. Oops, I just disconnected. They're not here, and they're my own ideas, but it's a concept I used in swing trading, because for 6 years, I think it was, I was a swing trader only. So the day trading thing is relatively new to me. Believe it or not, I've been using this algo for 12, 13, 14 months. And I built this algo over the last 6 months or so. And it's still in development. There are a lot of signals in here that will eventually be replaced by building them together, right? So for instance, like a pattern of signals will be combined into one. But to be able to know how to do that and where I should do that, I need to forward test it. So while I don't use all of them as entry signals, right? My primary entry signals are the exact same as this. But I've got these other ideas developing so that after the day or even during the day, especially if it's really slow, I can sort of see, hey, is that other idea I had, is it working out? Can I buy blue diamonds if they make a low that's similar to another low? Like this one, no, there's no low here, but this one there is, right? This one, no, there's no low here, but here's one that worked. Does it have a low there? No. So this one I'd miss. Well, it had a star too, but here, this one is a no-go, right? Because there's no low here. It's got to be established support. That's a no-go, no support. Well, it's got this one. Might have gotten caught in that. We need rotation. Here we go. So see this one? It's at support, right? So that works, even though there's not a star. It's on the other side too, but they're just here, I'll show you.
On the other side, they're pink, right? So this one, it's at this resistance, so technically it could work. But really, I want it recent. Like if it would be here, it'd be perfect. Just didn't show up there. Where are they? It's been bullish, so these aren't going to work very well. See, this one does not have. I need one of these flags to be nearby over here. That's not what. That's what identifies support. This one didn't. This bar here didn't get a purple flag, so that's not quite good enough. Here we go. So flag. If this one had it, it'd be good, but it doesn't. There's no purple diamond. Purple diamond. Flag is here. It's a little bit off. That one worked just because it was so damn bearish there. I'm gonna count that as just a miss, or not a loss, but a skip. But yeah, and then here we got it, and then they came back into it. So that there might be more to it. There might be more ways to use it than just that. But that's just an example. And like here, see, this one is not at support or at resistance. You've got resistance up here. It would need to show up now. So they're new ideas that I'm not trading, but I'm watching, because in the room, it's not a huge room. We've got probably 20 guys and girls in there, and a couple of us who enjoy coding and who have some experience trading and know like how to think about markets and stuff are all kind of contributing to like thinking about new concepts. And then as we find things that actually backtest and forward test that work, they can get added to this, but they're not going to look like this. It's going to be like, let's only show me the diamonds in that condition, right? So I wouldn't even have to think about it. Like, I'm not going to see this one because the condition isn't right, but this one would show up, right? And I can do that with coding. It's not hard. You just filter out the ones that don't meet all the criteria, right? But I need to see them all to determine what the criteria actually is. But eventually, you can see that like you don't get a lot of stars, for instance, and the stars require quite a bit. You don't get a lot of green bars and orange bars. They're not everywhere, right? And most of the time, they're going to produce trades. So yeah, that's kind of how you go from building from an idea to like a tradable signal. And so on my chart, I have both tradable signals and just ideas, right? Which I know is a little bit confusing, but it does spur some good conversation sometimes because people see it and they're like, hey, I noticed this pattern. Like every time this happens, you get this reaction. Is that a thing? And then I'll actually go back and be like, you know what? I think you're right. That is kind of a thing. But the problem is the market shifts, right? The market's it's dynamic. It's always morphing and like changing slightly. So things that worked like last year, they may not work anymore now. And so it's really important that you kind of always, or somebody in that you're affiliated with is always sort of forward testing to see if the stuff that you've been using is continuing to work if you do it right. And then also looking at like, well, if that's not working, what is working, right? And so that way we can have like a toolbox of potential patterns. And if something stops working, we can find something that does work through backtesting. And that's what's so great about having something that's so objective and measurable, like the algo. Like I don't have to stare at this, which is what the algo's doing. It's interpreting all of this information. I don't have to look at this and like guess what setup to use. You know, I can literally just watch and see what's working. Like, is it working to buy purple bars followed by a star? Like, well, I don't have any of those here, but if that was working, then maybe that's what I start trading like around here, right? Like you can actually use whatever your market condition is to tell you what algo patterns you want to trade. And like I said, you don't start with 20 patterns. You start mastering one pattern. and then you add to that slowly after you've mastered it. Because it's much better to sit here and wait for that pattern and do nothing other than just kind of watch the algo and learn how to wait for the signal to fire and learn how to like take a trade with discipline and not overtrade. It's so much more important to get good at that before you start like building all of this huge toolbox of trades. If I just like handed you this algo and was like, here's a list of 10 different combinations you can trade,
like most people wouldn't do very well because they'd have no idea how to like rate which ones are the best and when do I use which, right? You need to master them one at a time. But the good news is that like you actually only need like two. And as long as you don't mind waiting for them and you don't mind having like a 70% win rate and like, a good risk reward, as long as that doesn't bother you and you're actually trading to make money and not just like have an exciting time throwing money around, like if you enjoy like actually having a system to trade, you can learn it. But if you see this and you're like tilting because you didn't get long, but it didn't set up, like you got to fix that, right? That is a way bigger problem than I don't know, then I don't have a setup or whatever. Like if you can't handle the market moving sometimes and you not being in it, like that's going to cost you a lot of money. So it teaches you that discipline by basically watching and just doing nothing and being patient, waiting for that actual setup that works X amount of the time in these conditions, and then building confidence by seeing like, wow, I waited for that second blue diamond or whatever and it worked, and so I'm just going to keep doing that until it stops working. The traders who are doing the best in the room do exactly that. They specialize in like a couple things and they do a whole lot of waiting, and when their time comes they have killer days. So that's my own, that comes from personal experience and just watching people in the room over the last year and a couple months, is the ones who struggle are the ones who get frustrated by this and are like, oh, I was waiting for a star and it didn't give me a star, and so this doesn't work. Right? But yet when you look back at like the last 3 hours, if you just waited for purple bar star, you got a beautiful trade. And if you waited for pink bar star right here, you got a beautiful trade, right? That went like all the way down here. But then you missed this one because it didn't give you a star, and you're like, this sucks. It's like, dude, you've got 100% win rate and like 80 NQ points, and you're tilting because you missed a rotation. Like, do you eat and sleep? Because you miss rotations all the time. Like, are there more than one market? Like, I'm missing rotations in CL right now. I'm missing rotations in GC right now, right? Like, that doesn't tilt me. So why should the fact, if it didn't set up the way you wanted it to, you can't let it bother you that you didn't take it. You're actually just practicing being a disciplined trader, and eventually you can add to that and say, okay, I'm good enough at taking purple bar star and pink bar star. I'm going to add, purple bar, green bar, or the double diamonds or whatever, right? Like you can add one trade more, and then like you fuck it up for a while till you learn it and you master it, and then you've actually got two trades that might show up consecutively. And so rather than having to watch the market for 3 hours in the morning to make your like 250 or $300 that you want, you might get it in the first 30 minutes, and then you have to decide if you want to keep trading or not, right? Yeah, that's the way that it works well. So, but yeah, like I said, the new members of the room learn this algo that everyone's watching, which is the main algo, and I've just taken this and run with it and changed it a bit to fit the things I'm doing, and also just to keep me from over trading. You'd think that the more signals there are, that the more I trade, but it actually helps me not trade as much because most of these ideas that I've added are filters. So, for instance, like when there's a lot of purple in the background, I know that there's sell pressure. And so being aggressive buying through here is not a good idea. But once that stops, and especially if it's pink, the exact opposite is the case. So now I know, like, I don't want to jump on this and just short it simply because we're at resistance unless this pink goes away. And so that's that. Whereas you would just have to sort of know how to read a Brinko chart and look at volume and just recognize that, like, okay, like we were really bearish. We broke back into this channel, and now we're actually breaking over these pivots. So we're probably not going to just break this low easily, right? We're probably going to chop around here or maybe even go higher for a while. If you can see that, you don't need anything more, right? But like I said earlier, like if this goes fast, it's easy when it's slow. You don't need it when it's slow. But when it's fast and like I'm just trying to rack up some trades, I would much rather just be like pink, don't short. and then I won't make that mistake again. You know, I don't have to rely on my brain power to like filter it out and see it. I just don't short if it's pink. You know, and so it's one less thing I have to worry about, and it also keeps me like interested, I guess, when it's slow. Because when it's slow, I can like start to interpret like, what does that mean? They had all this sell pressure down here. They had these aggressive sellers sell at the lows, and now we've actually gotten over them with buy pressure. Well, that's interesting. I bet that they're trapped down here. Oops, I put that on the wrong side. Like I could hypothesize that these stars now are trapped at the lows, and so if we got a pullback into that area and they bounce off of it with a setup, right, a pattern that I know I want to buy, like maybe I would consider taking a scalp. You do best if you also refer to the bigger time frames, and like I said earlier, this whole area that's red is going to easily get traded through. So of all the places to trade, this red area in here is going to be the hardest. Doesn't mean you can't get scalps, and actually if you can catch it, they'll be big, easy moves. The problem is if you don't want to keep fighting it because it's going to pass back and forth really easily. So once it turns, you got to get the fuck out of there, because you could I'll show you you can see it on the 80 tick. So this is a big time frame with the same algo. It's going to have a ton of lines, but what you're going to see if I back out here is that this area in there just gets swept. See these huge moves? And each one of these bars is like 40 points, right? So like if you can catch these, you're good. But if you keep trying to fight this, if you're like buy here, buy here, buy here, buy, like no, you're gonna get absolutely destroyed, right? But notice even on the 80 tick, see how this starts turning pink here? Like I already know I don't even want to fuck with this. Like this is just long every pullback, right? Well, that has changed. See that? Now, did it give me a signal that I could actually sell off of? Only here. This pink bar, orange bar. Oh, wait, we had an orange bar with a yellow. We had it up here, I guess. But this purple by itself would get you, if you just waited for the purple and tried to sell that, you'd be pretty late, right? I have not figured out yet whether or not, what did I do? I have not figured out yet how I want to use it for like entries and exits. It is only an idea with how to filter out trades that I really shouldn't be taking. But I just wanted to show you on the big picture just how easily we can trade through this area. And so if I can get it to hook up down here, it could be a really good trade, but it's also really aggressive to trade in any of this. What's so much better is to wait to get out of here, right? And then get these turns, or to wait to get out of here and get these turns when you can pass through this entire zone with like a stop down here. Like that's where you make big money, is getting in the right spot. So the bell is just telling me that we are extending beyond the channel here, which for me has blue lines, and for Simon's it's orange and blue. So he sees this as like upstairs and downstairs. So like you can get long from downstairs or you can get short from upstairs in general. That's how Simon views it. I see him as quartiles. I like to have the midpoint here. And so I have a quartile at the top, and then a quartile here, a quartile here, and a quartile on the bottom. I want to get, I still agree that getting short up here and getting long down here, as long as you're balanced, is a good idea. But when you're not balanced, when you've got momentum in the market, generally price won't establish any volume below the mid. Here, I'll show you. Here's where it gets bearish. The gray line is the mid. See how the bear comes in here. They try to go higher, and as soon as they get volume above the mid, sellers come in. And look, the mid, it's not even approached, right? So that tells me sell momentum's strong. And when they do finally get volume above, which happens right there, things change. See that? And so with that alone, if this would have been a pink bar, then pink bar star would have been a really good entry for me, even though it's not touching the blue, because of that that change. But this one it just didn't fire, right? It just didn't set up right. But like I said, that's why I like the midpoint to be there. You can still kind of see where the midpoint would be, right? But like I like the precision and not having to imagine things. Like I just want to see it. I'm just a very visual person, and I've gotten really good at like I'm a little ADD, so I'm kind of good at like getting hyper focused on like just what I'm supposed to do and just ignoring everything else, because it's a coping mechanism I've had to use my whole life to like hang on to ideas that I'm even thinking about. So a lot of people who like have brains that aren't like wired strangely, like they can't stop looking at all these lines and they're just like, turn it off, my eyes hurt, right? And even this might be a little bit much, but for me, like my eyes are just right here and I'm already thinking, okay, I've got a purple bar. If I get a star that closes here, do I want to be short? I don't care what happened back here, right? And I know that the only thing I care about is right here and whether or not that setup is valid or not. So while I'm like determining what I want to do, I might interpret this. But when it's just like, I know I want to be short, in this case I wouldn't short it, but if I knew I wanted to be short and I just needed the star to show up when it closes, like I can ignore all the rest of this, no problem. But I know a lot of people can't. And that's why it's important to customize things the way you like it, right? There's a couple people in the room that have no idea how to code, which is totally fine. And so I don't have a copy of it, but I helped a friend. He didn't want to see the stars unless they came after a purple or pink bar, because all he was taking is pink bar star for shorts, like this he would short, and purple bar star for short, or would be a long, I mean. And he was getting like messed up, like having to like think too hard when it was fast about whether or not this was a long or if this was a short. Like he just accidentally like auto like hit buy and sell. And so he's like, can I just turn off all the stars that don't show up after pink bars and purple bars? You guys, it is so easy to do. So easy. Like I can do it in 20 minutes, right? I can walk you through how to do it even in probably an hour. But it's not hard to customize these things once you know what you're doing. But for someone who has no idea and they've never coded before and they've never used Sierra charts, it's a daunting task then, right? But that's why it's nice to have like a room full of people who like have been working with this software for ages. That because the interface of Sierra chart is it's such a powerful system, but whoever put it together like has never actually used it because it's not user friendly at all. But once you learn how to do it, you know where everything is and it's fine. So see how this did not trigger anything, right? So there's definitely nothing to do here. If it would have been a star or a orange bar, it would have potentially been a short. But the question would be, do you want to short this? And I don't really want to short this personally. When there's all this pink here, and you have look at this volume, right? I want to get here. We can draw it. I want to get under this. Ooh, it was close though. I want to get under this high volume node. I want to get under it. And then I want to come up and retest it and reject. That's the only way I'm going to fight a trend, right? If this is the beginning of that big move up that it could be, right? It might not be, but it could be. Then I don't want to be just like willy-nilly shorting because it's pulling back, right? Like I want to wait till I get a rejection. But if you want to be aggressive, which is fine, my coach is super aggressive. He takes almost all the trades. He's like just in it constantly, right? He will take this if it's a star, and then take profit at like 8, 9, 10 points, and then leave runners just in case it goes. And so even the times he gets stopped out, like as long as he's sometimes right and getting risk off, like that 10 points, he's fine like taking all those trades. I'll do that, but only in conditions where I think I actually have a chance to get like a big trade. And here I do not see the opportunity for a big drop because we've gotten over this midpoint and we're just like we just went straight up from there, right? After back retesting down here. So that looks bullish to me. And like I said, I've got this filter here to keep me from shorting. So I want to see them get under this, put some volume in here, try to go higher, and then fail. That's what I would want to see to get short. Otherwise, like I said before, if I can get a setup that's long down here, that would make sense to me. And if I don't get that, I will just wait until we move away from this fair pricing area where price can actually go back and forth quite easily. I'll just wait till it leaves, right? I'm okay missing that. So if this is, yeah, so you don't really want a long here, but it's you technically could say that this you'd have to be really bullish to take this trade at the midpoint. But what I will say is if they now come under this and then they come right back up again, I will probably take the long because that diamond there tells me that the bears tried really hard to push it down and then they quickly covered. So like people were like racing to get out of their orders or to get long, but in this case it looks like they're getting out of their orders. And so what generally happens is this here becomes a pivot. So here I can just extend, it's the same, I can just extend it like this. So whoever takes this zone, the next time that it acts as support or resistance, it's probably a good trade. So we just need to see them return to it after establishing volume above or below. And that's how I deal with, because the problem with it is that it's not down here at the bottom of the channel. When they show up down here, they can be monster trades. Even this is like pretty good, but it had a star, so it makes it better. But it also had the white diamond. But I would have preferred that it was down here, right? This is now high enough that they could get it right under here and then slip back up again. And if you bought this with the stop right underneath it, like if you put your stop right here, you're going to get stopped out basically exactly where you kind of want to get long, right? Which is, like I said, after this. Like once that gets confirmed, you're going to get long right here. So like, why put your stop where you're going to get where you want to be buying? And so I would rather miss the move if it doesn't set me up right, or I will wait for the higher win rate setup rather than taking it basically at the wrong location. That's the primary problem with longing there. It's just in the wrong spot. It's the right algo signal. Like everything on the footprint is there that it needs to be there for it to go higher. But I know because I have the algo that it's probably going to go lower before it goes higher. If you were looking at this, and you saw this, you might race into that trade and then get pretty. You could get stopped out, right? You might see like, actually, sorry, it's this. No, it's not. It is this. So they put in all this volume. They traded above it. They tried to get under it, and then they quickly raced up here and put a bunch of volume in it. So if you tried to buy this as they break out, you get crushed, right? And the reason that this doesn't immediately go is basically because you've got all this room down here, and that room is liquidity. So we want to see it get the liquidity and then confirm that buyers are in control. That's the only way. Or get higher, come back in and bounce off this would work too. That's the only way I'm going to long it. shorting here seems kind of crazy. Because we're not at the apex, which is up here. That's your primary. If you wanted to be short, you should be short, waiting to get short up there. So that's problem number one. Problem number two, like I said before, they can't seem to put volume in at the bottom half of this channel. And if it was balanced, most of the volume would be inside this channel because that's just how the channel works. It's based on like an ATR. It's a little bit complicated, but just trust me to say that when it's balanced, it stays inside the channel most of the time. So when it can't get below the midpoint, well, then there's momentum, right? Until there's not. So rather than just selling here, even though it's pink bar star, it's not at the location I want. And so instead, I'll wait to see if they confirm it. And by the time they come back up, if they reject it, this blue line will have come down and my location will be correct. So even though it might mean that my entry is slightly lower and I might miss the very first rotation of the down move, my win rate will be so much higher because there are times where you sell this and then they come right back up to here and then roll it over. And all of those times you're right and you lose. And that there's nothing more frustrating than being right and losing. So I will let them battle this out in the middle of this channel until they decide who owns this area. And like I said, the algo told me to watch it. That whole area is like the battleground, and we need to see who has the guts to put aggressive orders in above or below it, and then we'll see what happens. They'll take the liquidity, and then if they defend the level and they have aggressive traders follow through, I'll get an algo signal and I can get in the trade. And if not, I just sit here and wait and lose nothing, right? Other than time. But it beats just trying to guess that like, oh, this looks pretty bullish. I guess I'll buy it. And then it goes a little lower and it's like, it's still bullish, so I guess I'll hold, right? Like, I used to trade like that, and sometimes it works, but man, when it doesn't, those drawdowns fucking suck. So being able to get out of that boom bust cycle where I feel like I'm a god and I can do everything right because I just like have the trend on my side and I just get lucky for a while, to going like to feeling like I can't do anything right and that the market has it in for me, and then like, you know, psychologically you like make up fantasies like that and make it worse, right? Because you don't really have any confidence in whether or not you know when to get into a trade or when to know that your trade is not working. So like the less clear your strategy and plan is, the less you will be able to manage drawdowns. And probably the worst, you'll also manage the big runs, even when you're doing well, because you won't have the confidence to actually push it when it's working, because you won't know why it's working, because you don't have any data. Whereas here, I know when things are working, and so I can decide, you know what, I'm going to go from like one contract to two contracts or whatever, and like, yeah, like try to grow my account faster. Would be nice if we got a trade. So they are trying to push up above that. So if you would have shorted this in the middle, probably just got stopped out for a small loss. And like I said, it's totally possible this just rolls right over after doing that. So it's not bullish yet. The pink bars and the purple bars are inverse. The pink ones are bars where the price is going up, but basically the only reason for that is that buyers in the order book are pulling out their sell orders. So buyers are hitting market buy, but when they hit market buy, rather than getting a fill where they think they're going to get it, orders are getting pulled and they're getting a little bit of slippage. Basically, it's not truly slippage, but it looks on the DOM, it looks like slippage, right? Where suddenly the market just runs through an area that looked like it had sellers waiting there, and suddenly they just disappeared, right? That, like, it could be a spoofer, or it could just be someone who like was gonna short but then changed their mind, like for real. And so the purple bars are the exact opposite, where price is dropping, but it's primarily dropping because buyers are just giving up or the spoofers are pulling their orders. And so when I see those like this, right here it is, right here, here's that, there it is. So that is actually a better, oh fuck, I don't have my DOM up. That is the better sell. It's not perfect though. Let's wait for something that I am confident with because this is way better than this because it did trade above, but there's not a power bar here. There's not a little flag here. So it's not super, it's not like 70% win rate. It'll probably work, but maybe 50% of the time, right? And I want the ones that work like almost all the time. And the other problem here is that I don't know whether or not they're going to defend this area, so my risk reward just is not that great. And these purple bars, like I said, suggest that while price is going down and people are market selling, that the reason it's going down as much as it is actually that buyers are pulling their orders. So they're not absorbing the sellers, but the price is kind of dropping even though there's not a whole lot of aggression there, or even if there wasn't, I should say. It's just dropping kind of on its own because the buyers are losing interest. So it's not necessarily bullish or bearish, but it does give you some important information when you see how they react to it. So when you get purple bars and they're followed by more bear bars, it kind of confirms that whoever was selling here is actually still interested in getting it here. Whereas if you have a pink bar that's like immediately beat, well, these buyers weren't really that committed because once sellers actually showed up, they didn't even defend it, which is one of the reasons why pink bar followed by star or purple bar followed by star or one of the other algos is actually a pretty good setup because you've got it looking like sellers are getting somewhere, but they're really just doing it because buyers are giving up. And then suddenly all these algos that show up on the top are signs of aggression of one type or another on the footprint or on the DOM. And so like the order flow basically. So there's like a aggressive order flow here despite buyers literally just giving up just a couple points below this. And so that tends to trap traders. So here, this guy got trapped potentially. And what we want to see now is we want to see if they can come up here and get into that zone and then roll over. That would be the higher odds trade, preferably interacting with this blue line. That would be ideal. Yeah, and so the opportunity for the bounce trade is not as good now because we got this trapped buyer. That could potentially cause problems for our idea that we were going higher. Once you have this trap trader, now this becomes your target for any long. So do I really want to be getting long here, targeting here? Not really, right? Doesn't mean it can't go higher. It's just the risk reward. You have to keep in mind where you're targeting. And once you have a trader trapped, that's usually where they're gonna reverse if they even get up there, which is why it makes it a good short, right? That's why the short there works. So if this is a short, and even if this was a buy, well, yeah, like why risk 15 points when you're really only gonna get 8, even when you're right? It would be unfortunate if they just rolled this over, but they might. And like I said, it did technically set up, but it just wasn't as high odds as I wanted it to be. If I was gonna say, if I wasn't doing the video and I was up on the day, I probably just short this. Oh fuck, could I short it because of this? Oh shit, I think I could have shorted it. I forgot about the POC being right here. Oh, that was a okay short. Because did I get volume below it though? I did not get volume below it. These purple bars don't really count. So now we've gotten volume below this high volume node. So for sure now, if we come up here and then we roll over and get an orange bar or a yellow star, it for sure is a valid trade. I'm debating whether or not this might have actually been pretty good because this high volume node is way at the, see, this is a draw. Here, I'll do it again in case anybody's here that wasn't here earlier. We draw the volume profile of the up move to this apex, and the high volume node on that move is at the high, kind of like a P profile, if you know how to read profiles. And so if you imagine these are all like 30-minute charts, 30-minute candles, right? And you get a P profile for the day. If the very next day you trade underneath the point of control and then you come back into it and you reject it, it's probably exhausted. The bull trend is probably done, right? But the problem is that the key with that is you first have to get under it before coming back to reject it. And so, like I said, these purple bars, price did go below it, but volume really didn't. Like you got volume down here, they immediately reacted. You got volume under here, they immediately reacted. Well, then they got volume under here and they didn't react, right? So now if they roll, I can take it. But I actually need to see the aggressive seller show up. I can't just sell it blindly here. But if right here they turn around and I get a star down, I will immediately sell it. Absolutely. And my stop goes right above this red line. But I gotta get the signal first. I can't just guess that I think it's gonna happen. Like it actually has to close. I can't just see a star. It has to be a bar that closes with a star. And it has to close below this line, which looks like it's not gonna happen. So they're just gonna run right through that trap trader. Okay. Like I said, fair pricing, you're gonna get a lot of chop. It's very tricky. This is where I want to short it. See, if this is bearish, it will close down here. That red line, it'll close at 11,400, and we're good to go as long as there's an algo signal. But if it gets to 11,418.25 first, it'll print bullish, and I might be out of luck. I don't know if the next one will print low enough yet. But that's kind of just how Renko works. Like it'll print based on whichever one it hits first. And any signal you see while the candle's live, while the bar is live, they don't really count. They're just like they're not confirmed. They're just saying that like currently the criteria is met, but what matters is when it closes, because the criteria would be totally different if it closes bullish versus closes bearish. So you might have seen like triangles and stars and like colors come and go. That's because the bar is still live. Once the bar is closed, they don't change anymore. So no, there's not like none of them will go away. Like if we go back and see it's a star, like it was a star when it closed. But when it's live, you might get the warning, you might not. So it only will give you the warning if the criteria was met before the close. But some of the criteria requires like things that only happen down here. So it's like it may not give you any warning at all. And then as soon as it closes, you'll just see it change color or whatever. And in that case, you have a choice of whether or not you just want to mark it in, or if you want to try to get into your trade inside the range of that bar. Either one of those are totally fine. You just got to realize if you do the limit order option, you might miss the trade, right? Some people actually do both. They take like if they trade 2 NQ contracts, they might take a stop order at the top with 1, and then put a limit order inside the bar somewhere in case they get the retracement, and that way they can have a better entry. And that there's nothing wrong with that. That's fine. In fact, I think it's a pretty good strategy. It's a little bit tricky to do, but once you get good at it, it's a good way to do it. Come here, cat. I see you. All right, before you start yelling and screaming. All right, let's see. So like I said, I'm focused on this pink line right here, and whether or not the current bar can close below it, and then that's the only way I can even think about shorting this. I'm very concerned about the fact that it's still pink here. That is generally a sign that momentum is bullish. So the setup is strong if it happens, right? But it looks to me like it's probably not going to occur, because that pink usually means there's strong momentum. But they might just trap them again and roll it over. And if they give me a star or a orange bar, I will take the short, because it's a legit setup that actually works quite a bit as long as you've got the direction right. So if it doesn't work, then it's probably going higher, which, like I said, would surprise me. But yeah, if it actually, it would only surprise me if it triggers. But it does happen. I mean, it's if something works 70% of the time, it means 30% of the time it triggers and it's wrong, right? So you have to manage risk. There's going to be times where they just stop, But thankfully, a lot more of the time it does pay. So I've done it for long enough, and I've tested it enough that I know that if it triggers, I'm confident to go ahead and take it with full size. But I'm not going to guess whether or not it's going to happen. Even though I would get a better entry up here, I'm not just going to be like, oh, I think it's going to go down there, I'm going to get in. No, like I'll wait to see if there's even a star there. But an orange bar would do it too. Oh, good. See how the pink goes away? That's great. So if they close this bearish, the pink will be gone. That's a relief. If the pink is still there, then I really don't want to be short. That is the rule. I'm not supposed to short when it's pink still. It needs to be not pink. And yeah, so if it goes lower, it looks like it's going to turn off. For a second there, it looked like it was going to stay on. That was making me nervous because that would be breaking my rules. But like I said, I can't even get in unless it gives me a signal here. So let's see if it even gives me the star to even get a scalp here. The fact that we got one here might make it harder. Like we got two actually in a row. It might make it harder to do here. But I will do what it tells me. We've got this huge delta here. They're trying to trap those sellers. It honestly just looks like they're trying to chop this area to bits. But I'll tell you, there's been a lot of times where I'm like, there's no way this is going to work. And the algo says to do it, and so I do it, and it works. So I don't care how anxious I am about a trade. If it fits the criteria, I'm supposed to take it. That's the way it works. Okay, there's no algo there, thank God, because I don't think it's going to work. But there's no algo there. The red on the outside simply means that there was a trapped buyer up here. But it needs to also have a star or it needs to be orange. The red definitely helps, but it's not good enough to get an entry. A trapped buyer is not the same thing as an aggressive seller. Yeah, both is great, right? But see, we got the red outline here too because it trapped a buyer up here. So it's just warning me that, hey, they trapped somebody up here. Like, so if this becomes resistance and I get an algo signal, it's all good. But I already knew that because I got it here. Right, they're just doing the same thing again. Oh, interesting. They're saying if it closes bearish, I'm going to get that yellow arrow, which is a little bit unusual on a triangle. Oh, okay. Well, maybe not. We'll see. See how it kind of flickers on and off? It's there. It obviously doesn't know whether or not, like the criteria is changing because of the order flow. So we don't know whether or not it's actually going to be there when it closes, or until it closes. But once it closes, it will stay. You'll see that this red outline never changes. It's always going to be red now. But yeah, I don't have a way to trade on these bars, but I will tell you that when these bars get beat immediately, momentum is usually going higher. So like if this one would have gotten beat, let me see if I can find one. And green is the inverse of that. So if there's here, so green got immediately beat, there's probably actually bearish momentum here, right? Would you want to just short this? Probably not, because you're gonna get stopped out, then it's gonna go your direction. But it's just like I said, it's just information for now. I don't have the pattern down yet, but it's just something I'm observing. Just like these arrows are also. Okay, no arrow, but we did get a triangle on a purple bar. So buyers are going to need to turn this relatively quickly. They might just be chopping this area up, which just sucks. But thankfully, I'm not. Like, without the algo, you can see how you can make tons of mistakes. Like, oh, it's long. Oh, it's short. Or it's right. Like, you could really mess this up if you don't have a strict way to decide when to get into the trade and when not to. And honestly, even with the algo, if you're really aggressive, you could probably make some mistakes here too. But you could also see, like, if you were really aggressive and you just bought every green or every white star and sold every yellow star or every orange, you'd end up doing okay eventually. You'd just take a ton of trades. And some of them would fail miserably. You just want to have a stop. But there are definitely aggressive, active traders in the room that just are machines that pretty much take every signal. And like I said, they do have days where they lose, no question about it. But when the market is rotating, they kill it. They pay a ton of commissions, and it takes a lot of brain power, or maybe just, I don't know, maybe they're just good at video games and they just kind of video gamify it. But yeah, I need a little bit more than just it turned green, right? Like I need to actually have a thesis of I think it's going to go to this level, and buyers are trapped, and I want to see, like, I want it to develop a little bit. I'm just not that kind of a fast thinker. Um, I'm also not a super slow thinker, but like I need it to develop at least 2 bars. I can't just like boom, boom, boom. Like I need a plan, basically is what I'm saying. Um, I can't just like wait for a green bar and if I see it, just nail it every time. Like I'm not saying it's wrong. It's just not the way I can trade. I've tried it. It drives me nuts because like you do end up taking some drawdowns and you have to be really confident that if you just keep doing it, that eventually it's going to work out. But I would rather have a really high win rate. That's just my style. And everybody really is different. But Simon, the coach in the room, is really good at like helping you identify like what you're good at, basically. Because what you don't want to do is force yourself to do a style that really, like, you're not naturally drawn to. If like you shouldn't be super stressed trading, but there are some people that like need to just hit the button constantly, otherwise they can't focus. And for those people, like, there's no better trading than just like nailing every single signal, and they do okay. But for me, like I don't have that problem. My problem is usually I tilt because I overtrade, right? And then I make mistakes. Like my errors like compound. Like I've got like error convexity. The more mistakes I make, the more likely I am to make bigger mistakes. So instead, I need to filter out like all of these really aggressive trades and just like totally be fine with missing all of this. Like I'm totally cool with not trading any of this. I don't care about that at all. But what I do want is when it actually does give me a really high win rate setup, I want to make sure that I can like grab my 15 to 30 points pretty much every time I'm watching it. Right? Like I don't want to miss trades that I should be taking, but I've tried taking the 55 to 60% win rate trades and it's just too much for me. There's too much volatility in my win rate, in my P&L. Even though it works out, like it's that's what's stressful to me. As well as, like I said, like having these, like I just have a hard time, like if I miss it, like I was supposed to be in it, I end up missing the next one or getting more aggressive. Like it changes how I trade based on how well I'm identifying the setups and getting it on time. Well, if I'm getting a setup like every 4 bars, like you can't be thinking about that stuff. You just have to be rolling on to the next one. And my brain's just a little bit too self-conscious to like at this point. There could be a point in the future where I can do it, but for now I'm not that active of a trader. But I definitely know people who do it. And they do it well. But if you don't do it well, you don't want to do it. Let's just say it that way. Alright, so like I said, this arrow, if it prints, which looks like it'll probably only happen if it's up bar, would indicate, it's just information, it's not a trade signal on its own, but what it's identifying is a likely pivot. Right now, it looks like it, probably only if it closes higher. But that pivot, it could be big, or it could just be that, right? It does not tell you how far the bar is going to go. And so when you're not really rotating like this, it's very aggressive and probably not a very good idea to like overtrade all that little information. That like tiny little piece of information is not enough for me just to like long it, because we're probably going to have the next bar basically go higher. Like I need more than that. Is there anything I'm missing? They're probably coming for this liquidity, let's be honest. That's probably... Oh, well, I guess they have this one. Maybe they're just going to take this one. I'm still kind of wondering if this probably should have been a sell, but I mean, if it would have been, I would have been stopped out by like 2 ticks. Might have gotten back in just for funsies, but curious if I could have... I think I did it right because I waited for volume to get underneath and then to see if we got a rejection. The tricky part is we did get above it too, right? So it almost looks like we might be expanding in range here, which means the long is probably down here and the short is probably up here, if I had to guess. That's probably what they're doing. And that could take a while. And like I said, I'm not anxious at all to risk money for something that I don't know if it's going to work very often. So I will wait for the actual pattern that I know. Even if that means it won't happen, that's alright. But it might. And if it doesn't, like I said, I've got all these other signals that I can kind of keep my eye on and be like, oh, there's that other pattern I keep watching, and that seems to be working right now. And then, like I said, I'll do homework when I'm not trading. Like I'll take notes of what I see working that I'm not trading, and then I'll go back on during times when I'm not trading and actually like back test it and be like, did this work for a week? Did it only work today? What if I go to an average day in the last 3 months? How often does it work, right? And just count all the, like, I'll just manually do it. And then see, like, is there anything else I should probably filter out? What happens if the market's doing X, Y, or Z? And sometimes it's like, nope, that wasn't a real signal. It just happened today and it never happens ever again. Other times it's like, oh my God, this actually works a lot. And then we share it with the group and we have another potential tool in our toolbox. So, like I said, we could see things a lot easier on this time frame, on this chart book with a lot less signals. But especially when it's slow, having all this extra information keeps me interested. Because because I know what I'm looking for a trade. I already know what I have to see for that. So that way I don't like zone out. Because I can start to think about, I can like, while this is just like thinking, and I can see that there's no way that this can turn out to be a trade here because I don't have a purple bar here. I don't have a triangle here. All of my setups have at least 2 bars involved unless they are a location-based setup like this was, right? If this would have been a star or an orange bar, it would have been a location-based setup, and then it doesn't matter what this bar is. But for all of my mean reversion trades, I need to have a pink bar or a purple bar first. And that just increases my win rate. And so when that doesn't set up, and I know that I'm not going to get a trade regardless of where this bar closes, rather than like getting distracted, I can look back and be like, well, let's see what's working, like I said, or I'll look at another time frame and be like, did I have a trade on this time frame? If I was able to manage risk appropriately, is it bearish? Is it bullish? Right? And so it gives me more to sort of do with my brain, so that I don't like miss what I actually am looking for. Now, look, we trapped below this. See how we got below this? And now we're trying to bounce back. We did have a purple bar here. If this is a star, it's technically a long. But again, we've got trap traders up here. I guess we could take it just for demonstration purposes, but I don't like that there's a low right here. It's not ideal. It's really choppy here, right? But it would technically be an entry signal getting a bullish bar here because it got underneath this one and came right back up. I guess we can do it and scalp it. Let's do that. If I can do this fast enough. Okay. I mean, if it even triggers, it's got to close long. It's got to close bullish here. But my target is basically back up to this here. No idea if they'll get there or not. But if it signals, it's technically valid, so I'll go ahead and take it. Like I said, mostly just so that we're not just sitting here. But it's got to actually trigger first. I'm not going to guess. It's got to trigger. It doesn't actually need an algo signal. It just needs to close bullish because this bar was purple. If it's pink, that's actually great. That's totally fine. I prefer it to be pink with a diamond, but pink is totally cool. But it doesn't look like it's going to do it. And it totally makes sense to me that they're just going to take the liquidity down here. There's way more on this pullback than there was here. Way more. So I would not be surprised if this does not end here. Oh, yeah, no, we're good. Making sure I'm not missing anything. I don't see any reason not to take it other than the fact that these rotations are really tight. But they're trying to expand, so we'll give it a go. If it triggers. Ooh, it's getting me right in at 11,400. That's not preferable, but whatever. I can look for all sorts of. Alright, so we're in. Let's see if we can get. Oh, fuck, that was it. Shit, I'm not fucking fast enough. Okay, I'm gonna take profits. And then we're gonna hold runner for a little bit longer. And see if they just reject out of here or not. I will definitely just ditch this if they put any sign of aggression to the sell side here. Like that. We're
Order
done.
filled.
I'm not saying it's finished, but there's no reason, if they don't actively push this higher, they're not just gonna hang out here, right? This is like look at all this chop. It's either gonna go here and fail, or it's gonna go here and rip higher, right? So there's no reason to take a loss on those runners. So I can see what my fills were, but just to review, why did that quote unquote work, is because we got under this pivot, which has a little, here, let me get rid of the lines. It's got a little flag on it. See that? Little sideways flag, and then it's got this extension. And so once we trade under that, if it's like a virgin line, right? And we trade under it and bounce right back up again. And as long as we're actually rotating, and we're not just like trending, but we're rotating it, and I've got room to resistance, which in this case was this build of delta, then I can target that and put my stop. My stop was right under here automatically. I put a 15. Oh no, there's no. See, I got purple bar here. So if this is a star, but it's a higher low, which I don't like unless it's bullish. And this is not bullish. Price action. See, that's it. So if this is where new traders get like, sometimes you get lucky and it just works anyway. But I'm not gonna take this trade, even though it's purple bar star and it does work a lot. The problem is that what it's trying to tell us here. You can see how we made a higher high here, and then a higher low, and then a lower high, and a higher low. See that? That pattern usually, not always, but usually is chop, right? It's not bullish. Even though it's a higher low and everyone thinks, oh, it's a higher low, it's bullish. Like, but it's not though. Like, look at the channel, right? It's flat. It's not that bullish. Like, I know we had bullish momentum trying here, but it disappeared. See how there's no pink? So it doesn't mean it can't work. It's still a good setup. It's just not in the location I really want it to get the best risk reward, because there's a lot of times where it's going to hit this and then roll over, and it's not going to see, because my entry would be right here, if not a tick or two higher at 406. So I would need at least like this for that to be worth my time, since my stop has to go all the way down here. And there's a lot of times where it does exactly this. A lot. And then sometimes it just rips like crazy, and new traders are like, woo, this works all the time. It's like, yep, sometimes it does work all the time. But if you're aware of like what really good price action looks like, you can filter out some of the ones that are just like, looks good, or it's a valid signal, but how often does that actually extend, right? And now watch the meet my words as it like runs 50 points. But this is not a trade that I am currently taking. This is actually the very first trade I learned. Purple bar followed by a star is the very first trade I learned, and it works a lot no matter what. But you can improve the odds by waiting for it to be in the best spot, which would be in a rotational market when you have room to resistance and your stop does not go where you want to be buying. And in this case, if this is balance, my buys should be down here. Well, getting in up here puts my stop right where I want to be buying. So the two problems with getting long there is, one, I don't know how often I hit 18 and how often I roll over. Like, I should say I do know that it's not as high as it is when it's not a higher low in a balance period. This is balanced, yet we put in a higher low. That's not necessarily immediately bullish. It might be bullish. It's not that it's bearish, right? It's just that it's not gonna do what you think it's gonna do with like what you see higher lows do when it's trending. It's not the same. A higher low in a balance period usually just means contracting ranges. I'm getting tired. So the range is just contracting. You could probably draw like a trend line there and then do the same thing here. That's all that it is. It's just contracting range. So it doesn't mean that it's not a good trade. The next bar or two will probably be higher, But how often do you actually get this breakout to work? Like, not 70% of the time, right? So if you just want 8 to 10 points, yeah, take every one. You'll be sometimes you're gonna lose, but like every once in a while you're gonna get a huge ripper, right? So if you're okay with just taking some of your profits at 8 points and then leaving a runner in case you get 50, there's no problem with taking that trade. I'm just not trading that way. I don't wanna take the 15-point stop on my runners and be out with 8 points on a trade that works 55% of the time. It's just not good enough for me. When I have other trades that have 70+% win rate, and I know that there's a better spot to get this, I'm sure it'll set up eventually. I'm gonna run to the restroom. I don't know if this doesn't break out, it's just gonna get choppy, and it probably isn't worth trading. And this is already getting to be pretty long, so let me just run to the restroom quick and get some more water, and then we'll come back and see what it does. I will leave it up so you guys can see in case it does break out. My guess is that it either tries to break out and rolls over, or it just fails to break out. Let's see. Be right back, guys. All right, I'm back, and I've got egg on my face as we break out. Notice here at our entry, our stop was down here on the trade I actually took, and that stop never got hit. So you can see that it's not wrong to take profits where I did at the delta build, and then hold and see if you can extend. There's nothing wrong with that at all, right? I just had a
um, my analysis was that we're probably going to chop in this area. And even although what's one thing that might have helped me identify, I was not looking at this closely, but one thing I could have seen had I looked at here, I said that I wouldn't expect longs off of this voodoo range level to really create any big opportunities, right? But we did clearly bounce off of it. So it's not what I expected, but I know this is what they do, right? They bounce off of this and they get big rips. Like that is what they do, right? I just there's also times where just rip right through it, and so I wasn't willing. I said to expect some big rip out of here, and I didn't want to risk any capital on a bounce there unless it's set up perfectly, and it didn't set up perfectly, right? And so I wasn't prepared for that. Now, but keep in mind, I wasn't short either, right? The algo didn't tell me to be short. It did tell me to be long here at 11,400 with a stop down here 15 points lower. It did give me the entry. The hard part for me would be seeing this big delta here, seeing this resistance up here, getting my risk off and holding the runners, knowing that if I get down here that I'll be break even. And when I am not confident, basically, that we're actually going higher, right? It's very hard to do. Let's see, am I missing some voodoo range levels here? Nope, I got them. So we bounced off of it right here, and I had mentioned it, that looked pretty legitimate, right? And then you can see here, we got all pink here, no bearish momentum whatsoever. We did get price underneath this. What about off the low? Okay, so the other spot that we could have been watching was here. So it's really there to here. So to be bearish, right? Off. Oh no, I'm sorry. Is this off a low or a high? Oh, did I have this reversed? Fuck, I might have done this wrong. No, to a high. Okay, no, I didn't. So if this is the high, then to get bearish, what we really needed to do is develop volume down here and reject out of this area. You can see we tried to here, right? But they were not doing a very good job of rejecting. Here it was really quick. This one was the one that I ended up exiting on. But they did not get any follow through, and instead we got purple bar star, which is an algo signal that works a lot, right? I said I didn't really love it because it looked like they were trying to pretend like they were bullish, and I didn't believe them, right? But the algo did say, go ahead and buy it. I just thought that it would get stuck right here, and it looked like it was consolidating, and I was not confident that the next move was going to be higher, because I didn't expect that level to hold, right? So you can see how like that bias might make you decide not to take a trade or not to hold a trade that's totally legit. But like I said, when I saw this rotation coming back down, I figured that I was right about the consolidation, and then this higher low just confirmed it for me. So the only way I would have ever been long here probably is if I would have held runners, and that's simply because I was so focused on seeing if I could get this to reverse, and when it didn't, rather than thinking, sellers are failing to take this level, so therefore it's going to continue to be bullish, just like it has been. Rather than thinking that, I got stuck on we're going sideways, right, and thinking they're just going to chop here forever. But what I forgot was that chop here forever is totally tradable because that tiny little area is not where we have to stay. We can actually chop in this whole zone that's red or pink or whatever. You can chop that whole zone. We've seen it like a lot, right? So even though choppy is likely still, oh shit, pink bar, orange bar. Let's see if that works. This looks pretty bullish to fight it, but it's at a voodoo range level, so if it's gonna roll, it might be right here.
Let me just see where the volume profile is now. New right there. Okay. So our high volume node is down here. We don't really want to be bearish unless we can get volume underneath that. So I'm not selling this. It's not that it's not an entry. It is an aggressive entry, but you have to believe it's bearish for that to work. And like I said, after seeing what I thought was balance turn into straight up bull, I'm assuming that other traders were probably actually short here, expecting a rollover. So when all of these red lines got broken at once, with one rotation, it's very hard to roll it all the way back down. So even if we did get some continuation here, it probably would not go back past this middle line. Now remember, going all the way back to here, I mentioned that it started to look bullish when we failed to get any bearish volume. See how they got volume? The yellow line is volume. We got volume below it and they immediately pushed price higher. And here we couldn't get even price to go underneath it. Finally, we did get a little bit of volume underneath it and they pushed price higher, right? And so once this happened, I expected balance. And what they ended up doing was they held the only bearish volume that got down here were immediately followed by aggressive buyers. See that? So bearish volume below the midpoint, immediately followed by an algo signal of aggressive buyers. Volume below the midpoint, the gray line, immediately followed by bullish buyers, the one we bought, right? Volume gets below the midpoint, immediately followed by a sign of aggressive buyers. So there were signs there that we probably could break this resistance. And even though I had the direction right and I had the entry right, I was focused on the fact that we're trading right into resistance. And so therefore I took my 12 points and said, cool, I'm done. Even though it set up here again, I skipped this one, right? So, but it's important for me to remember that, like, and I literally said it like 10 minutes ago, is that the algo knows more about the current situation because it's actually interpreting all of this information as well as all of the order book and time and sales. It's looking at a shit ton more than I am, right? And so I need to, oh, there it is, pink bar, orange bar, right on the voodoo range level. It did work. So once again, like the important thing is decide ahead of time which patterns you're going to trade, and then just like when they happen, just do it, right? That's the way to trade a system like this, is because where I get frustrated and tilted is if I told myself I'm going to take every purple bar followed by a star, and then I would talk myself out of this, and then I'll end up missing this entry, which is similar, like orange bar or star, but they're both strong signs of aggression. So here was a long, and like this is basically just as good of a short. So it's you should either be taking like them all the time or don't take them. You know, like they're either good and like you have to study it and decide whether or not they have a good enough win rate and whether or not the risk reward is strong enough for your trading style. But if they are, then like you know, if you have the algo, like you're paying for it, you gotta use it, right? But I think that the hard part for me is when I want to be really restrictive with what I'm willing to take, because I don't want to have the big swings in P&L right now, especially trading the Apex Funding Trader account. Like I don't want to blow that up. And so, and well, you know, you could easily not blow it up just by taking only like the A setups. I'm committed to only taking the A plus setups. But what that means is that these A grade setups are gonna give me decent scalps that I'm gonna miss on purpose, right? And so you got to decide whether or not that is gonna cause you to trade poorly. If that's gonna make you trade too aggressively, because it's like, man, I just missed 2 trades. No matter what I see, any signal I know, I'm just gonna take it if it comes up next. Like that's basically tilt, right? You just are tilting with like an objective system, but like so it's better than like just going crazy. But like you have to have a plan for like these are the signals I'm going to take, and these are the ones I'm not going to take. And like I said, my plan coming into the session was A plus setups only, and that means that I skip A setups. So I got the A plus setup here. I took my profit how I was supposed to. I could have held a runner, and I chose not to. Right. So if I want to be if I want to be critical of anything, it should be the panic sell here of my runners, thinking, oh good, I saved myself a stop, right? But by saving myself a stop, I missed every single time it does this, right? And so I have to decide if that was not just this individual time, but if over a series of trades, if I do that over and over and over again, am I coming out ahead? Because if I'm not, then I shouldn't be panicking out of those runners in this situation, like ever, even when it does work out to my benefit, because if I'm missing out on opportunities, then like I said, I've got this tool and I'm not using it optimally. So, but then the other thing I have to ask myself is, like I said, how often are these A setups working? These A grade setups, are they working well enough right now? Are we rotating enough? Like, and I think we are. Like, if you look at the rotations, like they're wide. A grade setups are going to give me 20-point trades when they work. They don't work 80% of the time like the A plus setups do. It's like I think it's like 75. Not I don't. I had an 80% day, but yesterday, but like that's not normal. That was better than usual. So like let's say 74, 75 with the A plus setups. Once you have the A setups in, you're gonna drop your win rate, to maybe like 65. Right? But like I said, does that matter if they're giving you 20-point moves on a 15-point stop? Like, not really. Like, you can do really well with a 60% win rate if you're getting 20 points every time they set up. So that's really the question is like, how committed am I on like just taking the A plus setups, and what would make me change my mind about that? That's important for me to journal about, so that like I'm not caught off guard with emotions about like and I know how to respond to those emotions when I see stuff like this, especially if this goes like all the way back down and it's like, wow, I just missed like two 40-point trades. And like if you prepare for that and you remind yourself, well, that's because I did the math and I know that like my possibility of failing the account, of blowing the account, is like next to, not zero, but like next to zero, as long as I stay with the A plus setups. And by adding the A setups, well, my chances of keeping it are so good, I don't want to add that risk of ruin. And so I made a conscious decision to skip those trades. So of course they're going to work well, because I know they work most of the time, but I chose not to take them, right? Like, so if you have that like mindset prepared, you can avoid letting those missed trades or those mistakes, if you will, like the resulting, right? You'll keep that from affecting your decision making, because that's all that matters. And then it's just a matter of, like I said, deciding, would there be a condition where I can start adding back those A trades that I was trading? Because these A grade trades, I was taking most of them when I was trading the cash account. Because I was fine. Like, it didn't cost me anything to have the account. I could trade it, compared to the size of the account, I could trade it however I wanted. I don't have to worry about anybody like taking away my money. But with the funded account, with the Apex account, the prop account, I couldn't think of the word. Like, if you break their rules and you lose too much, even if it's not like an amount that would like actually cause you any strife, like if it's the amount that they say you can't lose, like you lose the account, and I mean, it doesn't cost you anything other than having to redo the fucking evaluation. Like, so it costs you time. Right, but I guess it does cost you, because then you also have to pay for the evaluation. So it would cost you the price of the evaluation, but it wouldn't, cost you as much as it would if you lost that much trading cash. But like I said, you have to limit you have to decide, like, for instance, like if I want to trade 2 contracts of NQ, and I'm only allowed a $1,500 loss, like that means I can't take like 4 stops in a row, right? So a 60% win rate is not going to cut it, right? So the only way to fix that is to only trade the trades that have like a 75% win rate, or trade the micros, and there's nothing wrong with that. You could do fine, still make decent money trading micros, right? And you could actually qualify 2 or 3 or 4 accounts and do really well. But yeah, like I made a concerted effort to try to get these. Like the problem for me is that they expire. I will have to repay for them next week if I don't qualify them, and they are so close. I've got 3 of them that I paid for, and they're all really close to being qualified. So I've made the decision that, you know what, I'm just going to trade the bigger size with the higher win rate trades and make sure I hit this goal before I have to pay like the 80 whatever dollars it was to redo it. And that way, then I can actually, in my mind, I'm like saving money by doing things faster. And I think I also have just like a mental block with the idea of trading the evaluation is just not like, it doesn't feel like I'm using my time to my best ability, because I've traded cash before, and so like usually those gains are like cash money, and it's not like, okay, you're one step closer to having the funding that you want, right? Like and so it's for me anyway, it's way easier to go totally nuts and like tilt out crazy on these evaluations, especially when you buy 5 of them, on like an 80% off sale, like I did. And like I blew up the first one of the 5. I think I blew up the first one in the first 3 days, right? And I wasn't even like, I was still trading okay, but all it took was a couple stops, and I basically gave up on that account. I was just like, there's no way I'm gonna be able to like grind this back up the way I should. So I'm just gonna take a good trade with 2 NQ contracts rather than like 4 micros like I should, or 6 micros like I should, if I really wanted a chance to grind them up. Nope, I've got 4 other accounts I can play with, so I'm just going to take the next A+ trade, and if it works, I'll be right back where I was, and if not, it'll blow, and no big deal. And it blew, right? So it's just like, oh, okay, that's a strategy that's going to lead to blowing up. That's good to learn, right? But it takes, you won't know that unless, well, you won't, even if you figure I tell you this, you won't believe it until you actually do it. You got to blow up one of those accounts before you realize, like, oh wow, this is actually a little bit harder than I thought it would be, because like literally all you got to do is just like lose a couple times in a row or trade too big, and it's blown, right? And the thing is like once it's funded, the rules are the same, but there's no time limit on it anymore, because the cost, at least for Apex, the cost is always $80 once it's funded. But like for the 150, I think it's like, if I have to renew it, it's like even though I get 50% off, it's like $160 or something. So it's like twice as much, and I got 3 of them, right? And I really don't want to have to do that with 3 of them with like $300, $400, $500 left on the evaluation. So it's like I said, I talked to my coach about it, and I was like stressing, and he's like, look, the solution's obvious. You've got more than 1 account. Your goal was to get a funded account, so you don't have to risk your own cash anymore, and you can trade someone else's money, which is a good goal, honestly. Like keep you out of trouble with having like, I don't, because what happened, the reason this all started, if anyone's curious, I'll share. I was trading cash, and I got locked out of my account when I was in a trade, and so I thought I was risking about $250 on the trade. My stop did not register, and I was unable to get out of the trade, and the day closed. And significantly uh, further away than my stop, and so in one day, I ended up losing like over 4K in an account that only had that was more than 10% of the account, right? So and it was just like it wasn't even my fault, like the CQG just broke, and there's nothing they could do about it until overnight they got it back on. But by then, the market was so far away that there was no way I was going to risk more. So I just had to exit for a huge loss, like a way bigger loss than I thought I would, right? And I was just like, this is crazy. I was going to quit trading over it. I was just like, even, and it's not the amount of money. It's nothing to do with that. It's the realization that like, I could literally lose my entire account, if not more, and I have no control of it whatsoever. Like, just a technical glitch could happen, and I'm totally responsible for wherever the fuck the market goes, and that just freaked the fuck out of me. And I'm like, I don't want to trade futures, right? And so the solution for me is get a funded account so that like the 100K in the account is not my money. And so if they have some kind of technical difficulty, yeah, I'll lose whatever I made in the account, but I'm not going to lose 100K, you know, unless I've made 100K, and then in that case, it's like it's not that big a deal. But it's not my like, it's not my money that I've like earned from my paychecks from my regular job, because I only do this 3 days a week. You know, I work the weekends and nights so that I can do this 3 days a week, and like to just like have that cash account at 100% of it, if not more, at risk of like any technical difficulty was just mind-blowingly, devastatingly terrifying for me. And yeah, I wasn't willing to do it. So the only solution for me is to do these evaluations and get access to the funding, and that way, as long as I keep following the rules, I can make money, and then that money that I make is really the only thing at risk. Even if I'd somehow lose all the money in the account, I wouldn't lose 100,000. I would lose like whatever I made, so like 1,500 or something. So the max I could lose is how much the profit I've made trading in that account, and that is just a lot more palatable for me than losing the entire thing. So yeah, I just decided, okay, that's what I got to do. But you have to be a hell of a lot more disciplined than I was being with my cash account. You have to be so much better to pass these evaluations, because you've got all sorts of restrictions about like how big you can trade and how much you can lose and how much you can give back. And yeah, it's not as restrictive as Top Step, but it's still tricky. But like I said, I'm knock on wood, I'm pretty sure I'm going to qualify at least one of these three that I have left, as long as I keep taking good trades. So that is why I'm not buying, even though this is an algo signal that I've talked about and you've seen me trade it, and so is this, right? And I know it gives me 12 to 15 points, way more than 50% of the time. I have also seen them stop 3 in a row, you know, and that would be enough to not blow the account, but get the account beyond a point of repair where like the only real way to take it back up to where I have it now would be to trade smaller, and so it would take too much time, and it would like I would have to renew it, which is like, what's the point when I can just not take those trades for a little bit, right? Once I actually get it qualified, or them qualified if I'm more than one, I can go back to taking the A grade trades. And so, but it's been a really good exercise for me to like see it and be like, okay, I can't take this, but I know it's probably going to work. And then like to manage the emotional response of like knowing it was going to work, or being confident it was going to work, not being in the trade, and then seeing it go without me. And just like waiting here for the trades that show up like a couple times a day, but I am really confident that they will work. It's been a struggle, but it's a good struggle, because it's built that that patience muscle, and it's gonna make me a better trader, even when I add these back, because I'm not gonna be tempted I might be still tempted, but I will trust that I can wait to pull the trigger until I'm supposed to, and I have a way to know exactly what I should be doing, what I'm supposed to be doing, and that's I think the more important part is it's the process doesn't have to be fixed. I don't have to fix the process. The process is good. The process is great. I've got the plan. I know what to do. It's the how do you execute the process as a human being that makes trading hard. Without a process, I'd be totally fucked. But with the process that works, I have a chance. Let's say it that way. Some people are just naturally good at this, and I am not one of those people. I'll be totally honest. I've gotten good at it, but it has not been natural. This has been a long, difficult year. Not in losses, but in like I actually did way better than I thought I would. But it's been like grueling and like mentally, psychologically really tough just to trade the freaking colors, you know? And like I think that the hard part is you tell yourself that this should be really easy. I just have to wait for these patterns, right? Like it shouldn't be that hard, but we make it hard. At least some of us do. I see some people come into the room and like catch on really quick and just like do what they're told, and like they're sizing up already and they've only been in the room like 3 months or something. It's like, and here I am on like month 14 or whatever, and like yeah, like I've sized up already, but it took me a long time, right? I was not ready in 3 months. I was still questioning whether or not I even trusted the damn signals 3 months in. So, you know, and there's just some people that like don't have the bad habits that I had, that they just do what it says and they do well. But it's, for me, it's like, I need all these extra information just to keep me from doing stupid shit, you know? And that's just the way everyone deals with whatever their brain is, right? Some of you are gonna have a really easy time, and others are not. But I can at least serve as a good example as someone who like had every reason to fail this game, but yet has like persevered through all of that, and like continued to like build my skill, and what's funny is it's not linear. Right? Like I've had like weeks where I like was ready to quit, and weeks where I was making what I made in a month before, right? Like it's not linear, but it's once you start hitting some milestones, all of a sudden you start to believe that you can actually do it, and things change really fast. Like I can pinpoint like the week even, or maybe at least the month, where like, and what it took was like surrender, right? I needed to surrender the idea that I knew better, and I still work on that, right? That I know better than what the algo is doing, and I just had to decide I'm gonna take this trade if it happens, and be totally fine with a stop, because I know that if I take that trade 4 more times, 3 of them are probably gonna win, and this one happened to be the loser. You know, and once you really, really trust that, because you've actually done it over and over and over again, and for me, I had to like back test it and forward test it and teach it and do all these other things before I even like finally saw like, oh my god, like these numbers are actually like real. Like you look at the spreadsheets and it's just like, these are real trades, you know. And then you see in the room like everybody like having their own little twist on it, and like some people catching on, and other people really struggling. And like I said, it reminds me of like, I know exactly how you're thinking, you know. I was totally there. Like there's no way I can just buy every, you know, this pattern. Like that'll never work, right? Like that, I was there for weeks and weeks and weeks. And then I also went a couple weeks like I was insistent on figuring out what the heck it was, right? I was like, I must know what a star means, right? If only I knew what the star meant, I'd have this all figured out. No, that has nothing to do with it. I'll guarantee you that is a lost cause. Totally lost cause. Because every signal that I've tried to come up with that like I think like mimics the star, nowhere near as consistent. Same with the orange bars and the green bars, nowhere near it. I can find things that work, but not as often as Simon's. So, you know, if you're smart, you'll just see that people are able to do it with just these signals, and you'll just train your brain to get really good at these. Like I said, I've gotten kind of addicted to the idea of finding new ideas, and some of them work great, and so that's very rewarding. But the truth is you really don't need anything more than just those couple of colors and symbols. That's literally all you need, and maybe an ability to like read a chart, or just know how to like look at levels that are shared in the room. Because there's honestly tons of people who can read a chart. There are very few people who can actually execute a system. So like, if your trouble is I don't even know how to interpret this, like, oh, I swear there are plenty of people to teach you that. that is readily available information. Anybody can learn that. I could literally teach you how to interpret a chart in a matter of hours, right? If you were really committed to doing it. But learning how to actually execute a system, like, yeah, it takes fucking practice. Primarily practicing what not to do. Like practicing not doing it, I mean. Like practicing this, like waiting for it to do something. And then thinking like, what would get me in a trade here, right? Like, and sometimes that you become like resulting and you're thinking like, oh, there was a green bar all by itself. Can I just buy those? No, like it's not all the time. This one might have worked, but not all the time. And like I said, what we needed it to do, sorry for that long tangent. I'm obviously totally overtired and just rambling. But hopefully it's at least entertaining, if not educational. But what we wanted to see to get short, we needed to get it underneath this volume build and then retest it and go lower. And that clearly did not happen, right? So you could certainly say like if I was still long, I'd have no reason to cover, right? But it's really hard to find a way to consistently jump onto these when they just like keep running and they don't rotate very much. It's very tricky. You can try buying the green bars by themselves and it'll work when it's really bullish, but you will get steamrolled eventually. So you need to either wait for it to set up right or with a high win rate or you need to be willing to like take the heat when you're wrong, because you won't be right 70%, 75% of the time when you're trying to like guess where this is going to pull back. I mean, it happened to be right to the high volume node, and that's pretty cool. But I don't have a system yet for buying this. There might be a way. I'm not saying there's not. I just don't have it. I don't have that yet. And so usually when it grinds higher like this, I'm just glad I'm not short. And I'm hoping that it gives me like a rotation so I can get long. That would be great. But like it needs to set up though. I can't just buy it because it looks bullish. And this definitely looked bullish. But there's no pink bar here. And if this star was right here, that's a trap setup. But 2 bars before, this is just an aggressive trader reacting to the high volume area, right? It's the kind of trade that I used to take all the time. It's like, I know I'm bullish, that looks bullish, I'm buying, right? But then you get in and like it starts to struggle here and like you have no idea how often it like breaks out or like how often it comes back and traps under and bounces again. And so then it goes under and it bounces and it drops and like you end up buying here and getting stopped out, buying here and getting stopped out. And then you don't even know, like, should I be selling now? Like, if there's not a system to it, like you don't know what to do when it doesn't work. But when I know what the setups are, then like I just wait for the setups. And if they don't come, they don't come. Like I'm already up on the day, you know, like as long as you're trading decent size. I mean, you might as well if you're gonna only trade the stuff that works 70 to 75% of the time, you might as well trade decent size once you get confident enough. Like, there's really no reason not to. So I can technically have a really good day just by like having my good, with like a 75 win rate. Like, you're gonna often get 3 trades working in a row, right? That's gonna be like a regular occurrence. And like I said, I never had that happen earlier. But when I only trade the highest odds setups, I will regularly have my very first 3 trades work. And what my coach tells me is he's like, go do something else. Just leave. You're doing great, but what's the like? You're gonna get a stop eventually, and like you've got 3 in a row, and it's like 9 in the morning. Like, just bug out. Like, go do something else. Enjoy your day. Like, if you're up that much, like, why keep trading when everything worked? And it's counterintuitive to me, but it does make sense. Like, you're gonna run into those stops eventually, and there's totally a chance that you're gonna run into a couple of them in a row, or that you're just gonna get tired, or distracted, or whatever. And if you've already hit like more than your daily goal or whatever, and it's early in the morning, like, at least take a break. See where you're at. Like, do something else. Come back. Oh, that's a pink bar star too. So we made a higher high. Let's see where the DVP is now. Everything's moved here. Erase volume profile. We're not taking the aggressive trades. It's technically another short, but it's an aggressive short. Okay, the DVP is the volume profile, the VPOC is all the way down here. So I'm going to highlight that high volume node there. It's close enough. So what usually happens is it comes down to there and then bounces, which is what we saw happen here, right? If it continues to be bullish. But we want to keep our eye on another screen. I have this. So we bounced off the voodoo range level that we've been orbiting around, which kind of looks bullish. Let's be honest, right? But if it's gonna roll, it's gonna roll here, where we've been getting sellers. We've been running into sellers every single time in like this zone, So if it's actually gonna roll over, it's not gonna get out of this 11,472 area. And so that is right here at this blue dotted line. Like, we could literally roll right here, right? I don't know if we will, but we could. So you don't want to be too aggressive buying like into resistance, even if you think the trend is pretty strong. And it is. You can see how long these rotations are without their lack of rotations. It's like they're going up, and then they come back for like 3 bars and then go up again. So it's just typical momentum trading. And if you have a method for momentum trading, that's where you do it. You don't have to use the algo if you don't want to get your entries. Like I am, because I can't take more than 3 stops in a row without blowing up this stupid account for the next week. But technically, if you have a different way to trade momentum, you could just, watch your chart and trade momentum. What the algo is really good at is mean reversion, selling highs and buying lows, trading in balance. The stuff where all your trend following strategies don't work. Right, the simple stuff that you can just use levels and stuff for. Like, once that stops working which is like a lot, on the days that you don't get the breakouts that have a retest, on the days that you have what's it called, an attempt but a failed breakout, stuff like that. Like, where normally you just take a stop and you're like, well, I guess I was wrong, and then you leave. Like, those days are where we're like racking up wins. Whereas the days where it goes up like this, like those of us who just trade that high win rate setups, we're like reading a book, playing video games, like waiting for it to rotate again, because there's no reason to fight this. And I'm not just gonna randomly buy a sign of aggression. And like, technically I could probably get 10 or 15 points, but I'm not gonna do it that way, because like I said, I don't have any metrics on how often that works or how many times I should try it. Whereas I know all of that for the patterns that I've mastered. So, but I also know that these pink bar, orange bar, or pink bar star, this was actually pink bar, orange bar, and pink bar stars. There's 2 reasons to get short here. When we have a lot of momentum, these A grade trades, while they do tend to get a response, they don't always go past the midpoint. So you have to have decent risk reward, and here your entry would be, my entry would be here at like 43.50, let's say, and you'd be getting, I mean, you could almost get 15 points. It might be worth it. It might be worth it. It's not always going to make it there, but the times it makes it here is actually quite rare. And that's where all of us like fantasize about, is like, oh, we're gonna get like a 40-point trade here, and then it's gonna retrace 10 points and then go another 40 points because this is the top, right? Like that happens like once a day, right? So you can't take all of these and expect all of them to give you 40 points, 80 points. You literally have to get in here knowing that you want to get out as soon as you interact with this midpoint. So this becomes a scalp because momentum is so strong, and they're just not letting the market rotate, and they're getting outside of this channel. Like I said, usually when it's balanced and these mean reversion trades work really well, all the volume is inside the channels. This is what you should see, is this yellow line really rarely spends more than a bar outside the blue lines, right? Like all of this is when it works just fine. Once it starts to do this, where it's like it can't even stay in the channel, and then if it does close one in the channel, the very next bar has a lot of aggression on it, and they just lift off again. Like eventually that will stop, but while that's happening, these trades are not gonna produce huge extensions, but maybe once, you know, in that like entire move. Like one of them will, but you might have to try like 6 times before you get that rotation, that reversal. So why even try when you can literally just wait for them to like actually fail and then often get the retest that's going to work a lot. But knowing where the retest is and whether or not you should take it is the key. So I did draw this right? Yep. So that's drawn correctly. So to get short, we really do need to get price all the way down here, and then it needs to reject, and then it needs to go lower. So I don't have high confidence that'll happen. It is getting kind of late. We'll see if they set up here, and then maybe I'll get some rest, come back for the regular trading hour open. Just get a couple hours here. This dash line is the voodoo range level. It does often act as support and resistance. If they bounce right here, that's super bullish. I just don't have a way to trade it unless it actually sets up. Triangle down, green bar, purple bar, star, purple bar, green bar. Those would be the setups I'd normally take if I wasn't trying to qualify this account. So there's the purple bar. So if I was trading cash, I still have it, I could definitely do it. I would, it's already got a line. I would be planning on getting long if that star prints, the bullish star prints as they close this, or if the bar is green as they close this, if it looked like this. The blue diamond on the top would not be enough because this is not an established support, just like this one was not an established. And when I say established, I mean it has a line there. Right, so if we made that blue diamond again down here, that's actually good enough for me to get long. But without traveling down into this zone, I personally can't get long right now because of my strict rules. But if this would show a green bar here or a star up when it closes here, it's good. It would be good enough for most people to get in. But most of the room would be getting long. But you know what? We're at the wrong side of the channel. There's really no great way to get. There's no great way to get long here. Really, no great way to get long here. Yeah. What we really want is for them to push one more time, and then put a ton of volume up here, and then rip it down. That will set up a short right away. But if they just flush this, I miss it. Or if they just rip it higher and don't roll there, I miss it. So in that case, I'll just go with sleep. Because I mean, I'm up. You know, I mean, I had the one trade, and this is how it goes when you have strict rules. Is like you might get 3 trades in a trading session. You know, I've been going for 2.5 hours, and we technically it should have been a bigger trade than it was. I took profits. I panicked out of the runners when I could still be long the runners, but it's one way or another. I had the entry correct, and it did pay me. So the trade literally was the best trade of the session, right? Like the algo did its job. I just didn't quite execute the exit correctly. But it's good to know that the system's working. And if you think back, it's like I would be just fine getting long where I did and like just holding those runners. Like, sounds pretty nice, you know? So you have to remember that when you want, I need to remember that when I want to panic out on these because I don't think it's bullish enough. And that's why I said earlier, I pretty much have egg on my face for saying that I didn't think it was going to happen because the algo said it might, and I didn't trust it. But that's where I can improve. So that's something I need to work on, and I will. Yeah, we really do need it to get down to here. And that would be expected. That'd be pretty normal. And as I said before, if I was trading the A grade setups, I'd be shorting this, and I'd be shorting this, and just taking my profit right here, basically. I'd just be getting out of the trade right there. But I made a conscious effort not to take those trades because I can't blow up these accounts. So good to see they're working. When I can start taking them again, I can confidently do it because I miss taking them because I know they work so well. But for now, they're on pause. This one came really quick. This was hard to execute anyway. But you had this wick in this range. Any of these prices is just fine if you're trading the A grade setup. Which is, like I said, usually the first one Simon teaches people. Pink bar, orange bar, pink bar, star. His isn't an orange bar, but you get the idea. This signal. His orange bars are like little white squares inside of the bar. I have a hard time seeing them, so I just changed it to a color bar. I just color the bar green or orange. His look like little squares. I can't see that. Not when it's fast. And sometimes NQ gets really fast. Right now it's slow as fuck. So I'm just talking to keep myself from falling asleep. Okay, we're finally getting into that high volume node. We've traded underneath the Voodoo range level. That is usually, see how we got a bearish candle with the point of control below this dash line? That is a sign that we're probably going to try to trade under this. It's not good enough for me to sell it, but if I was long, I'd be out. Right? Although if I would have shorted this, I'd also be getting out. Because I'd still expect some attempts to save it. If I would have gotten long back here, I'd probably exit right there, honestly, because we rejected the Voodoo range level. And I realize it goes higher, but I'm not going to hold through 3 bars to the downside. I wouldn't actually hold that. So it'd be very, very difficult for me to catch this last leg. Not that it is the last one, but the most recent leg. This is going to be very hard for me to take. Now, one solution to that Daniel in the room has done is he trades the 16 tick. That's ES. Here, he trades the 16 tick, and on the 16 tick, you get more setups. You also get more stops, but you get more setups. So like back here, when it was the green bar, you had a trap back in. You had a green line. You traded under it. You came back over it. That's an entry at 11,428, which is right here where you wanted to get long, right? So by trading the 16 tick, you can actually just get more trades, and that one would be an A plus trade on the 16 tick, but on the 24 tick, like 10 or 5 points later, it printed as an A grade trade. So because you have more bars, you're gonna have more stops, right? Your win rate, but your stops are going to be small. But you got to target really fast. Like you're taking like 8 to 10 points on those scalps. But you can still get the 50-point move, right? So if you're quick and you're good at executing and staying in the zone, the 16 tick is awesome. If you're clumsy and slothy or easily thrown off or tilted from taking stops, even though they're small, 16 tick is a horrible idea. But during Globex like this or London, I will occasionally trade it. But not when I'm trying to qualify these accounts. But it is kind of interesting to watch to see like just how often it does stop versus the 24, whereas the 24 rarely does. These will stop relatively often, but the stops, like I said, will be very small. But I'd need to retool my bracket orders to like auto take profit at like 8 points or something, and then like not. See, the problem is right now I have my stop set automatically to put at 15 points, and a 15-point stop on here is like almost 2 bars. So if the market just like dumped, I'd take twice the stop as I needed to. So I would need to like make some settings for just the 16 tick, which I can totally do, I just haven't done. And I just have to change those settings before I trade it. Okay, so here we go. Underneath the high volume node. So this A grade setup worked beautifully. I guess I shouldn't have just covered it here. Had I taken it, I said I would have covered it on this bounce. But it did trade under the voodoo ring sell on reject, so I guess it makes sense to hold a runner. But I would want to take most of my profits here, because in my experience, most of the time it bounces just like this one did. It just didn't, right? So now let's see if it comes back up and tests this area and then rejects, because then I can actually get short. And that's what I initially said I wanted to do. I said that this looked like expanding negotiation, and that this was really where I wanted to get short. We came all the way down here, so it was too late to short. But now we've come back up to this voodoo raise level, so if they can set up here and roll down, it'll probably take out the low eventually. I might fall asleep before that happens, but it'll probably take out the low. Okay, that blue arrow is not what I want to see. That generally means a pivot's coming, like to the upside. Doesn't mean it's going to break the high, but there's probably well, I guess I do need an up bar. It needs to come back here, so maybe I do want that. So I want an up bar. If I could ask for whatever I want an up bar right now. The sooner the better, because I want to save this for when I'm in the trade. I want them to try to go higher and then reject. So I'd like this to go higher, put a little wick up here, and then close lower with an orange bar or a star. And then I can short it. And then I can go to bed. But if they don't bounce it here, there's nothing I can do. I can't short the breakdown. That's not allowed. That's because that's not a 70 plus win rate. 70+%. That's like a 30% chance that gets me paid. Okay, so here's no. The first up bar is probably going to produce a second up bar. That's what this blue means, but it's so distant from it now. I'm not even sure if that still applies. It's usually what like happens like right now. But now I needed to get all the way back up here just to take a trade, and it seems hard to believe that we would come all the way through here again. So pretty sure that trade idea is just gone. Like it just didn't set up. Right? They just flew right through the high volume node without even pausing. Which is like, oh, I mean it paused, but it didn't give me a retest. Oh fuck, did it do it on the 16 tick? I didn't even watch. No, thankfully it didn't. Yeah, it had to establish volume below it and then come back up. It did give the star in the right place, but it didn't establish volume below it. So it's not the high, it's the aggressive trade. This is the aggressive trade. But then there's this aggressive trade too. So it technically gave you 2 entries. Okay, let's see if they actually rip it higher. Otherwise I'll just go to bed. Almost 3 hours in, I'm sure most of you are gone anyway. So we have these green lines mean that we have liquidity under there. So usually when it gets this close, they get underneath them. I would expect them just to flush that. If they don't, I'd never buy it. Okay, not never, but I wouldn't buy it. I mean, this purple background means they're actually trying to put bearish momentum into it. So in addition to just aggressive, really there aren't any aggressive sellers through all this. But when I say momentum, I mean like on momentum measures, those momentum measures are like exponentially increasing. So the opportunity is there for it to exhaust, but until that purple goes away, there's no way I'd buy it. No way. Because momentum can stay as long as it wants. Yeah, it's gonna go get that liquidity, which was my target. And in if they take that, I can't. I'm just gonna go to bed because then it's just gonna dump, which is sucky. But if they bounce it right now, it gives me a chance to maybe short it. But it would be like the shittiest bounce ever, right on that line, like a perfect double bottom. The worst possible place to bounce. Like literally on the line. That's great. That's just great. Just flush it so I can go to bed. I really don't want to sell this at all. Flush, please. Okay. Took the first one, got some liquidity, go a little lower, please. Don't even tempt me, just do it. There we go. So buyers just totally gave up here. This is why you don't just buy dips blindly, especially in a bear market. This is exactly what happens. Okay, so they took one of those lines, approached the second one, and then now they're trying to defend it again. Which is totally nuts. So someone's probably just taking some profits and then it's going to roll. But I have a hard time believing it's going to get all the way up here where I want my entry. And it's already hit my first target. So I better close this before I just fall asleep waiting for this to do something it's not going to do. But at least we got the one trade, and you guys got a history lesson, and I, shared some of my struggles through this first year, trading this trade and perform algo. But if you guys have any questions, feel free to DM me on Twitter at RedBenTrader. Otherwise, you can email Simon if you want information about the algo, which would be his algo that looks like this. This algo here, right, which is what mine started as before I built on it. So if you want more information on how to learn about this algo, how to join a trading room, or how to just get a free pass to just see what it's all about, you can email Simon at trade, the letter N, perform. So trade N perform at gmail.com. And like I said, if you tell them that you like follow me or whatever, and they saw my video and I promised you a couple days free in the room, he will grant you that. And if he doesn't, DM me and I'll get him to. But yeah, he doesn't do any marketing at all, and which is fine. It's a small group and I kind of like it that way. But yeah, the only real marketing he gets is from what's it called, like warm, personal introductions and stuff. So it's not like it's like some kind of exclusive club or whatever. Like anybody can join. Even there's people in there that don't even know how to trade until they join us. But he's just not interested in growing. Like that's not the point. He's having the room is not to like try to build it into some big like giant room. Like he's making his money trading, but he does want to give back to the community for those who are committed to actually learning a system. And if you're going to learn a system, you might as well learn this one because this one actually works. But yeah, if you have any questions, feel free to ask. And I hope you guys learned something and enjoyed the stream.